Coinbase Inc. ticker symbol COIN is currently up 10% in the pre-market to $235 a share. The reason for this, as is always with Coinbase, is Bitcoin is up, or it was up on Sunday. It increased around 10% to its current price of around about $93,000. So what we're going to be doing is talking about Bitcoin and Coinbase, and then going to my automated stock valuation spreadsheet to see if Coinbase is a buy or a sell, looking at the latest company financials, and then taking it to my discounted free cash flow model, which is here, comparable company model. We won't be looking at the dividend discount model, as Coinbase does not pay a dividend, and the Ben Grimm formula for intrinsic value. So what we'll do is we'll just put in the ticker COIN quickly. If you're interested in this sheet, please check out my Patreon. Links are in the description. It's the $4 tier, but we'll talk about Coinbase. So if we look at the 5-year chart, it was IPO'd back in 2021, about 350. It never beat those highs, dropped down around about 80%, 90% to lows of around about $33 a share, and is up quite a bit since then. But if we look over the last year, been relatively flat, down about 5%. Now, if we were to compare this to the price of Bitcoin specifically, we look at the 5-day charts, month charts, tracks pretty closely, apart from the fact that Coinbase, well, we need to see Coinbase shooting up now about 10% because of this price. But you can see they track very, very closely. 6 months is a pretty good tell. You can see here the Bitcoin of about 50%. Coinbase will probably be up slightly more in that time, but you can see they track it very, very closely. If we do also do the year as well, Coinbase had a bit of a recent drop, and obviously this includes Bitcoin's more recent jump, which you'd expected. So Coinbase and Bitcoin follow each other really closely. I wish I could show the 5-year chart, but unfortunately, because Coinbase IPO'd here, Google doesn't handle it very well. Coinbase down 36% in that time, Bitcoin up almost 1,000. So if you love Bitcoin, I would say invest in Bitcoin over Coinbase, but let's have a look at the fundamentals here, or sorry, the financials. $215 a share, that is going up, as we've said before. Market cap 54 billion, once again going up. PE ratio 22.7. Obviously this will increase as well, but the market average well below that with about 30. Earnings per share $9.48, and a beta of 3.61, meaning it's a lot more volatile than the market. It's about as volatile as the crypto is, which is why you can see it's a lot higher. Analysts do say there's a buy though, $330 a share on the target price. As I said, doesn't pay a dividend. Let's have a look at revenues. Trailing 12 months in 2024 is the same, so we'll ignore the trailing 12 months. Down from its all-time highs of 21, but increased from 22 to 23. Revenue has doubled in that time, and if we once again look at this, the stock price has gone up quite a bit since then, so that is good. It's kind of tracking what makes sense. Net income, is it profitable? Yes, it is. It was profitable in its first year, dropped down quite a bit, and now it's profitable again, 2.6 billion. Free cash flow, generating lots of free cash flow, down from its all-time high of 21, but increased in the last 2 years to 2.56 billion. If we look at operating cash flow, very little capex, in fact none here. So operating cash flow minus capex is free cash flow. You can see here they've actually cut their capex spending almost completely, and this is the free cash flow. Shares outstanding, what they're doing? Well, they're issuing more shares. There's splits and stuff here, but this is pre-IPO price, so I can ignore this. But you can see here they have been issuing more shares and hopefully reinvesting back in the business. So let's have a look at the discounted free cash flow model. This is a way of valuing stocks in their future free cash flows and discounting them to today's value. It's currently not returning anything. This is because we don't have the numbers for 2020. So we'll look at the margins. Ooh, all over the place. We'll take an average here. That is about 41%. Minus 300, we'll ignore that again because we have some other issues here. Let's see if we expect net income. We're expecting 6.6, quite small revenue increases. Let's see if analysts agree. 8.5, and then flat actually. So they're expecting declining revenues over the next few years. So let's just keep it. We'll put it as a moderate increase, but yeah, still, so minus 300. And the reason for that is obviously the free cash flow rate because they have negative years. So we'll take an average of these two. 66%. $61 a share, so we'll bring this down again. Oh, actually, weighted average cost of capital is very high. Normally we have that about 8.5, $144 a share. So if they were able to sort of match what they did this year, with those higher margins, it would be about fairly valued. But as we've seen here, analysts are expecting a negative or flat growth over the coming years. So discount free cash flow does say it's about overvalued at the minute, but this weighted average cost of capital is probably the highest I've ever seen, actually, 20%. So it brings it down even more so. Ben Graham formula for intrinsic value looks at earnings per share versus the P of a non-growth company, and we'll see what analysts are expecting. We should sort of see that the next growth is, they're expecting negative growth, unfortunately. So we'll put that at flat, $64 a share. So for them to be a buy at this price, you would need them somewhere in the rate of about, what, 15, 20%? Yeah, 20%. Is AAA bond yield still the same? Yeah, it's 5.46. So finally, we'll look at the comparable company model. Although this will be hard because we don't really have any direct companies. I mean, the ones that eventually come to me is of course Hood, which is Robinhood, but they're more stock trading. Looking at Seeking Alpha, what are they saying for comparable companies? Coin comparable companies. I can't spell, my mistake. Oh, this is, we'll go Seeking Alpha. We'll also go, okay, fine. We'll do Riot, see if Riot returns anything. And we also have MSRT. Do we even have data on this? No, it does not. We'll look at back to here. I mean, it says SoFi. This is another one I'm looking at. We'll add this in and see what we can see. So immediately off the bat, in terms of enterprise value, Coinbase is the largest. Revenue, most largest. EBITDA, highest. Most profitable. Biggest margins. PEG, price to earnings growth, very low. Ideally one that's under 1. Robinhood and Riot don't have these. EV to revenue, it is one of the lowest. EV to EBITDA, it's one of the lower ones. PE, one of the lowest ones. Forward PE in there. From what prices we can glean on this, it does actually look about fairly valued, maybe a little bit undervalued, which is quite interesting. But as is always, my main concern, God, terrible, that wasn't intentional, with Coinbase is the fact it is tracking so closely to the price of Bitcoin, which is, yes, you have a company with good fundamentals under it, good revenues, and if you do believe in Bitcoin and you think it's going to keep on going up to $1 million or whatever, then why wouldn't you just invest in Bitcoin? Because I think that's the thing here. Coinbase tracks Bitcoin, and over the last year it's down. Well, it'll be up after once the market opens, but is flat, whereas Bitcoin's up 50% in that time. 5 years, Bitcoin is up 1,000%, whereas Coinbase is down from its initial IPO price. So if you love the crypto market and what the crypto market's doing, then as always, it's probably just better to invest in Bitcoin. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already. Check out my Patreon, and I'll catch you guys next time.